Hey guys, welcome to the channel, and in today's video we'll be discussing the SMA line and the EMA line. So if you're interested in investing, there's a link down below and it'll take you to a link, and if you sign up for Robinhood you'll get a free stock, so that's pretty neat, free money, right? So before we start, I want to make a few things clear. Understanding indicators won't, it's not 100% sure thing to like win every single trade you make. It's an indicator. It helps you predict things in the chart, so you can make your own predictions. It helps you understand the graph better, and it gives you more details, instead of looking at a naked graph. So the EMA line will be represented by this pink color right here, and this line right here. And the MA line, or the SMA line, same thing. Is that Robinhood phrases it differently for some reason, will be this light blue color. And both of them are kind of really similar. You can tell because they're like almost in the same place, but they have little differences that really do matter. For example, both of them are great at spotting like entry points. If you don't know what an entry point is, well, an entry point is just the first green bar above the SMA line or EMA line. So it's when you start seeing a peak and like it's gonna go up, stuff like that. Some examples are, let me see if I can find one. If you go to monthly, you can see that right here you're in the middle, so you're deciding if it's gonna go downtrend or uptrend. This first green little box right here, or candlestick, you see that it's above the SMA line or the EMA line, my bad guys. And then it keeps going up, and then as soon as this red candlestick up here dips down the SMA line, it starts going down a little bit, but then it picks up back up, so that's pretty much how to use it. Me personally, I rather use the SMA line, because the difference between the SMA line and the EMA line is that the SMA line doesn't take new price action into consideration, right? So as the graph moves up, it doesn't move, it moves, but normally with the graph it takes all new price action equally, as in comparison to its counterpart, the EMA line, which constantly moves. It's pretty hormonal. It goes up with the graph slightly. It can go spike up really differently. If you go to the overall chart, you can see the difference right here, the EMA line down here and the SMA line. So the EMA line is like a double-edged sword. I wouldn't recommend using it to try to find exit points either. Finding exit points with the EMA line is really hard because it'll go down with you. Some example right here would be, let me see if I can find one. The trend goes down, and then you could have exited up here to keep secure profit if you were using your SMA line, but the EMA line went down with the new price strength, and you lost more money in comparison to using the SMA line. So yeah, so I would use the EMA line when the stock market's kind of going crazy and there's a lot of price movements, and you want to try and benefit the most. But if you're like normal trading and stuff like that, I recommend using the MA line or SMA line. So yeah, they're really useful in many situations. Be sure to understand what each one does and when to exit out. For example, me personally, I do my trading in the morning around 8:30 because that's when the stock market's open for me. And when I start trading, I do my trades in the morning because in the morning is where there's most volatility. If you don't know what volatility means, it means that there's a lot of people trading, the amount of people trading, like buying and selling stock at the same time. And the stock market moves, in simplistic terms, when more buyers are present, the stock moves up. And then when more sellers are present, the stock is oversold and it dips down. So you can see right here, the stock is normal, and then it's being oversold, it dips down, and then it starts being overbought little by little until it hits, after market hours are closed, and then it hits 481 right here, and the market's closed. Right now I'm making this video when market hours are closed, so nothing moves, so it's easier to demonstrate. Right now I'm down not much actually, because I accidentally put 22 cents in Bitcoin, so it's not moving at all. It's like 0.001, which is not affecting the portfolio that much. I'm up $15.84, but hopefully that can change tomorrow, which is Monday when market opens. The stock market is following a really weird pattern, which goes up like most of the stocks skyrocket Monday, dip down Tuesday, go back up sometimes Wednesday, and then Friday they go back up. Let me see if I can see this pattern, like pharmaceuticals right here. So today, last day was Friday, and went down and then skyrocketed back here. If you look at a week, let's see. The 26th was Tuesday, and it was normal, right? Wednesday it did down, and then back, and Thursday it went back up a little, and then Friday it went back up. So it's really weird. It's really hard to understand what's going on during this whole pandemic because everything's moving so quickly. So far, I have 10 shares of Inovio Pharmaceuticals because they're working on a vaccine. But most people think that in order to generate income or get a profit out of this, you have to actually have the company has to have a successful product. That's a lie. You can just ride hype. Honestly, you don't need to have something successfully to work in order to gain something from it. For example, Inovio has came up with like a bunch of news talking about how stem cells and stuff like that have shown up in their test subjects, like the guinea pigs and monkeys or whatever, and that brings the stock like pretty high. News catalyst like brings it up a lot, so that's really good. So yeah, if you enjoyed the video, well, leave a comment and subscribe.